Sure will. Jim Sheenline.
Here.
Tim Bivens.
Here.
Tom Kitson.
Present.
Jennifer Dallas. And we have Mike Copine
Here.
and Keen Hudson sitting in for quorum.
Right here. Okay. And if Charlie finds out that that's not kosher under our board rules, we appreciate you being around the table anyway. We'll figure it out as we go along. So anyway, we'll go around the room as usual. Jason, good morning. Yes, do you have anything for the finance committee? Oh, you will be at the edge of your seat all morning long, I can tell you. Tim will attest to that fact.
Did you mean how or if?
Yeah. Paul, do you have anything for us?
The only thing I was going to bring up was about the veterans assistance. Do you want to talk about that now? Did you want to talk about it at a
Go ahead.
different point?
Because we're not taking any action.
No, we're not going to
Just
take
something to
any
think
action
about.
on this, but I've been doing some research on veterans assistance. There are some new mandates coming down from Springfield that, and I think Mr. Gorman had given us a background of it last summer, last fall, that we'd be needing a full-time person. And there is some language in the statute that says if we developed a commission, we could do a levy. It's a very small, it's 0.03% of our EAV. And that would be a restricted levy for veterans. I'm still working through to figure out as PTEL, I'm getting some conflicting information. As PTEL, would we be able to basically increase the levy for strictly veterans assistance if we went that way? Or because as of today, we actually show that in our county general levy. We're levying the minimum because we have, that's something we have to do. And I know you guys all would agree it's something we want to do for the veterans, I believe. Hopefully I'm not speaking for everyone there. I would want to do it myself. But if this is something that we need to do and we need to hire a full-time, I think we need to look into, one, a Veterans Assistant Commission. The other thing that we may want to look into is, could we share that person, whoever that might be, with another county and offset some of the costs there too? Because Mr. Gorman does it as a part-time stint right now, but if we maybe got together with a different county and we're able to do a full-time, we could share the costs. So I wanted to bring that up to you guys. I'm getting some information from the Illinois Treasurers Association on this. They're trying to understand what is required and what we need to do. So I wanted to bring it to your attention, and it's something that maybe we need to be looking at during our budget reviews.
Paul and I talked about this a few days ago, and I guess the clarity we need is the commission, is that completely separate from our functionality? It's basically a whole nother new board, and they will control their levy. They're going to be filing the paperwork. It basically takes the Veterans Affairs out of County General and moves it to a different entity.
Correct.
So we wouldn't have anything to do with it. They run their own shop. They run their own show with their own tax dollars. So that's something, and I told Paul, I said it's something to think about, but we need clarity as far as how this thing's actually going to work. So.
Yeah, so just informational right now. As I get more information, and maybe if we need to do something as a board, I will let you know. But I would also, it would help us if we had this, if it was possible, it would help us to develop this and not take away from the county general, but it would also benefit the veterans as well, to have them have their own commission, their own board, and their ability to levy. And again, that ability is really very small in an overall scheme of the county compared to everything else, 0.03%. So that's less than 1%.
So anyway, something that we can talk about as time moves on.
Yeah. So other than the financials, that's all I had.
Okay, very
Okay.
good. Reed?
Nothing other than what's on the agenda, but I will introduce Josh from Whipfly. He's here to discuss our audit. So when we get to that point on the agenda, he'll take over.
I'm so glad you did that, Reed, because I was gonna call him Chad. I don't know why I had stuck in my head, he's Chad, but Josh, good morning. Thank you for being here. Appreciate it. Have anything for us before we get started and when we get to your part of the meeting?
Nope, just have a quick presentation for you guys later, just a few slides to go over, so.
Super.
Oh, no,
Yeah,
it's not
thanks
mine.
for being here. Dean's okay. Nancy, have anything for us? Amy?
Better not, Chairman. I have nothing today. I'm glad to be here and nice to see everyone. 2 days in a row.
She does that just to, you know. Wow. Thank you, Amy. Appreciate it. All right. Charlie, do you have anything?
I do not, thank you.
All right. Thank you, Charlie. All right. We have the approval of minutes. Is there any additions, corrections to the last month's minutes? Hearing none, I entertain motions to approve the minutes. Moved by Kitson, seconded by Jennifer. All those in favor signify by saying aye.
Aye.
All opposed, motion carried. Okay, we've got the treasurer's monthly financial report with monthly financials. Read.
You mind if we skip down to Josh's part first?
Yeah, no objection. Does the committee have any objections that we skip down and do the audit? Since Josh is here, we'll be cognizant of his time.
Thank you.
You bet.
All right, thanks, Reed. I think I sent a few slides. I don't know if you guys have it on the screen or if printouts or not. Should just be that first PowerPoint. All right. So very similar to last year, again, my name is Josh Faber. I'm a senior manager with Whipfly. I've been here several years. I think I've met most of you before. So, gonna just go over a quick recap of the audit. The audit was finalized, beginning of April. So I know we were gonna attend the May meeting. But I know Matt and I were both, out that month. So unfortunately, pushed to June, but it's been done for a few months, but just kind of wanted to give you guys a quick recap and answer any questions that you guys have. So as part of the county's audit, there's several different reports that we do. The first one is the independent auditor's report for the county, which is the main, opinion that we provide. It's a clean, unmodified opinion, no issues with there. The second one is over internal control and compliance in relation to government auditing standards, otherwise known as the Yellow Book opinion. We had no findings related to that too, clean, unmodified opinion. The third one is over internal control and compliance for federal uniform guidance, which is the federal portion. Clean, unmodified opinion, no issues with the federal portion of the audit. And the last one is we do a separate audit for the circuit clerk. We had no issues with that also. I'll mention that's not on here, but we do a separate audit for the ETSB. There's no issues there. And one thing I'll just mention, it's not really related to the county, but obviously Reagan Mass Transit District has started its own entity as of 7/1/24. Their board had engaged us to do an audit for them as of 6/30/24, just to basically make sure things are rolling forward properly. So we're in the process of getting that finalized now. Reed's been a big help in getting that done. The Reagan Mass Transit District Board engaged us to do the audit, but technically, since it was a part of the county as of 6/30/24, it's being reported as a fund of the county. The reports will get addressed to their board since they're the ones who are engaging us and the ones who are preparing, or paying for the audit essentially. But it's reported as a fund of the county. So I know Reed's reviewed the reports. We've gone back and forth over some of the changes and things like that for that. But just kind of wanted to mention that was being done also, even though it didn't really.
But
impact
this
the
will be
county's-
the last audit,
Yes. Yep.
Yeah.
So as of 7/1/24, that's entirely gone, in the county's audit report. I didn't mention it in the notes here, but there is, some special line items in there with the transfer of operations out that are noted in there. So starting with, the FY25 audit, the one we'll be doing next year, that'll be entirely gone. So there was 7 months of operations for regular mass transit lots, whatever you guys want to call it, in the county's audit for 24's audit, but then for next year, it'll be completely gone.
And
So
then-
just a note, that's taken 7 years.
Yeah.
You know, when I got elected to the county board, that was basically when we started the process of moving that off. So when you talk about government moving slowly, it took 7 years to get the mass transit off of our books and
Yeah.
onto their own end.
I remember ever since we started doing your guys' audit that it's always been a discussion. Oh, it's going to get moved eventually. Every year it's like, oh, nothing yet. So
And quick question on that, since it is county, since as of June of 24, I'm assuming we'll get a copy of that?
Yeah.
or- Okay.
yeah, you guys will get electronic copies. I'll send one to Reed and he'll send it out however sees fit.
Thank you.
The good news is there's no findings or anything for any of the audits that we've done. So everything's clean. Going to the next things to note, the county expended, I know we talked about the federal portion of the audit that we do. The county expended $5.4 million of federal awards for fiscal year 24. The threshold is $750,000. If you spend over $750,000, this single audit, the uniforms guidance audit required, that threshold is moving to $1 million, starting, I think, for fiscal year 25, if not 26. I'm not sure of the exact date that's effective. You guys will still be over that threshold likely. The state and local fiscal recovery funds were tested as the major federal program this year. That was about $3.1 million. So that was the major program that was tested for compliance. Every year prior to this, we've always tested those public transportation grants as a federal major program. Since there were only 7 months of operations, that wasn't tested this year. So this year, the only major program that was tested was the ARPA grant. With them being separated, they'll have their own separate single audit for their grants moving forward. As of November 30th, 2024, there was only $172,000 of ARPA money left. I'm assuming that's probably all spent by now. If not, there's very little remaining of that. So your guys' federal expenditures for fiscal year 25 is going to drop significantly, removing all of the public transportation grants, all of the ARPA money being spent. Really, the remaining grants, all you guys have is the health department, some EMA grants, going to be pretty minimal. You guys might not even meet that threshold for next year for having the single audit needing to be done. Reed does a really good job of keeping track of the grants and everything. So as we get closer to the fiscal year end, we'll have a better idea if that's going to be necessary or not. One thing I kind of mentioned, and this has kind of been a thing that's been discussed, for several years, is that net pension liability. You guys pay money into IMRF. IMRF invests those funds. Ultimately, there's actuarial reports that are determined to say what your liability is. It's largely due to investment returns. The net pension liability decreased this year from 5.6 million to 2.7 million. You guys don't look at this very often because it's not on your books, but something I just like to mention, last year for fiscal year 24, there was overall net investment income of 6.8 million. The prior year, there was a significant net investment loss. So just depending on how the market fluctuates is what that number changes. And I just kind of wanted to note that.
The only other thing I would say is the pension liability information is probably 11 months behind our actual stuff. So it's always reported for 12/31 of 2023 when we're doing 11/24 audit. So when there are losses and gains in that, you got to kind of go back 18 months to go, what happened that year in the investment world to see, does that check out? So.
Yep. Thanks, Reed. Just something I kind of want to note. Also, you guys had $655,000 paid on long-term debt during fiscal year 24. And one good thing to note is that the county's cash was fully collateralized and insured as of November 30th, 2024. Next slide. This is just kind of for your guys' information, just kind of showing the revenue by function, showing kind of where your revenue sources come from. For fiscal year 2024, your main revenue source was intergovernmental revenues at about 53%. The second highest being property taxes at about 25%. And the third highest is your charges for services at about 15%. So those three revenues make up, the significant majority of your guys' revenue sources for the county. Those intergovernmental revenues are, your sales tax, income tax, any of your grant revenues, all that kind of flows through your intergovernmental revenues line. So that's a significant portion of your guys' revenues. And then property taxes obviously being a pretty significant portion as well. And it's pretty comparable to last year. If you looked at the 2023, there's not many major changes with how your guys' revenue sources are coming from. Then looking at the expenses, this did change a little bit from last year, just kind of how things were reported. This year, and for 2024, transportation was your guys' largest expense function at 21%. Last year, if you look at that compared to 2023, transportation was at 10%. That's due to how things were reclassified this year. Reed prepared the audit for the 2020 or the audit report for 2024. So we moved anything that was, the Reagan Mass Transit function related. That was reported as general control administration for 2024. That was moved to transportation. So transportation includes public transportation, highway, anything kind of related to that. Try and make it a little bit easier. So that's kind of why you look at that and you see, all right, general control administration was 41% last year. This year, it's 20%. What decreased so much? It was the moving of those expenses for the public transportation department. Number two, public safety is your second highest expense function at 21%. Then general control and administration at 20%. Then capital outlay, those are all your capital projects throughout the county, that being about 19% of your functions.
So question, Josh.
Yeah,
Th- th-
absolutely.
So this also includes highway, right?
Yeah.
So, okay.
Yep. This includes all of the
When I think
funds.
of the buckets, I think of county general.
Yep.
And public safety's, 43%
Yep.
or thereabouts. So with having road and bridge involved and the highway department involved in that dilutes that. So.
Yeah, this includes all of the different aspects of the county. So it includes, the health department, highway department, all those different departments are included as part of this. So this is the total. If you looked at the audit report, this is the total of all of them. And then judiciary being the fifth highest at about 12%. So I just kind of wanted to show, that major change just because of how things were reported. Not a significant dollar figure change, just more of moving those funds from general control to transportation. The next one kind of want to go over is just days and fund balance. This is a nice little, ratio that we like to provide. Just kind of shows, how many days are left. So this is for the county general fund, how many days you could operate based on expenses if no money came in. So this is kind of a 5-year trend showing, how many days you have. So going from, 147 back in 2020, it's down to 81 this year. How that calculation is divided, calculated is based on taking, the fund balance for the general fund divided by general fund expenditures multiplied by 360 to get the days in fund balance. And you look at this and you might say, all right, we were at 147, we're down to 81. What can skew those numbers? There was, back 3-4 years ago, there was the IMRF fund, the Social Security fund that were tracking those things differently. All of that information is now included in the general fund. So there's a lot of additional expenses in the general fund, that are in there now compared to what there were 3-4 years ago.
And just to comment on that, because there was some little bit of confusion, the ordinance that we passed on the required number of days is actually
60.
not 90. I've said publicly a number of times it was 90. Had that in my head, but it's actually what our policy is by the ordinance that we passed is 60 days. So we're still well within our self-imposed limitation.
Any questions on that information, how it's calculated, anything like that before we move on to the next last two items? We talked a little bit about that net pension liability for the IMRF. This kind of just shows kind of where you guys are, the 5-year trend of what your funded ratio is. For first year 2024, you guys were 99% funded for the regular plan. You guys have two different plans. You have the regular plan and the SHLEP plan for the sheriff's department. The regular plan was funded at 99%. For 2024, you can see that was an increase from 95% last year. And then the next page for the SLEP plan, it's funded at 91% compared to 86% last year. So, that net investment income is really, what drives the number. You can see in 2022, the SLEP plan was at 107%. And if you look at 2022 for the regular plan, it was at almost 119%. So just kind of wanted to share that. That's very brief overview of the audit. Just kind of wanted to go over some highlights for you guys, answer any questions you guys have or any other questions or concerns.
Any questions for Josh?
No, I guess the only thing that I kind of saw in there, I mean, just the notations about, and I think Reed had already mentioned that, about the, and I think I listed it as immaterial, but there was the off to book accounts
Yep.
change.
Yep.
If you just want to speak to that a little bit.
Yeah, so off the book accounts are essentially what we determine are accounts that are held by the county that aren't tracked the same way through the accounting system as all the other funds. So, you guys do a very good job of keeping track of them. Reed makes entries for them every year. I think there's a progression to get them fully integrated into the accounting system. So, like the general fund, all receipts, all cash payments or, checks, everything like that flow through the system the same way. There's some other funds, some other bank accounts that are held by the county that don't have those same internal controls. The main goal is to have every single bank account, every single fund by the county going through the same internal control system through the county. That being said, we do 15 county audits in the state. You guys are one of the best at keeping track of them. We have several counties that, some departments just have their own access to their bank accounts. They provide us, for audit, their ins and outs. They don't have the same controls. You can see what happens at other counties when those controls aren't in place. If they have I'm sure you guys have heard in the news what's happened at other counties, but, risks like that happens when they don't have the same internal controls. So we determine that to be, what we consider a business advice comment, something, just to consider, but not something significant enough to make it a finding.
And I appreciate you comparing us. That's nice to hear. So thank you for letting us know that insight. And the only other thing I think that I had was just the error correction. Just was curious about more details on that.
Yep. So this year, GASB 100 related to error corrections and accounting changes was implemented this year. The error correction was just due to an accounting treatment for the accrued compensated absences to move a portion of that to the funds instead of what we call the GASB 34 fund. And I think that was something that Reed had kind of determined, through his, process of getting ready for the audit. I don't know, Reed, if you want to speak a little bit more on what you determined and why you wanted to move that.
Yep. So we have two sets of books in the financial statements. There's the fund financials and then there's the government wide. Certain things for the fund financial statements aren't recorded, like long-term assets and liabilities. In previous years, we have our employees that have accrued sick time and accrued vacation time. Previously, all of that was being recorded as long-term, which probably not exactly true, right? Like people are going to use vacation time in the next year. So it was being recorded. It was just being all recorded as long-term. So it was only showing up on the government-wide financial statements. My thought was, well, we have a cap on vacation time, right? Like you can only accrue up to a certain amount. So you're probably using those in the following year that you're earning them at least. So it's more current. So current liabilities do get recorded in the funds. So it was really more of a shift between the two. And just so happened to be in a year where GASB issued a new standard where you run those through something called, error correction and stuff. So to me, it was always more of a reclassification. Hey, we decided that the accounting treatment on this was maybe should be different and would be better presented in the financial statements. It just gets reported in a footnote called error correction.
Yeah.
Well, I appreciate your due diligence on that. No, that's appreciated and sounds good. Nope, that was all I had.
Very good. Anybody else have any questions? Well, as always, Josh, we always appreciate the work that you do for us and coming in and explaining what you found and keeping an eye on this guy. So,
I'll do my best. All right. Thanks, everyone.
All right, very good. All right, so we will approve this, to move this approval of the audit to executive, moved by Bivens, second by Dallas. All those in favor signify by saying aye.
Aye.
Charlie has something, so hold that motion. Yes, sir.
So looking into the appointment of members to the committee, the bylaws, strangely enough, are silent to that. So I had to go to Robert's Rules to take a look at it. I don't believe that you can appoint beyond what the quorum is. And the reason for that is, as looking through it, is while we don't think that that would happen here in this committee, in this county board, if a chair were to go rogue and decide that there was something on the agenda they wanted to do and pass through, they could put
And
whatever
pack it.
membership they want on there.
Right. Yep, that makes sense. Yep. So just for clarification, Mike and Keen will not be able to vote formally on motions. But we're glad that you're sitting around the table with us, keeping us company. Anyway, we have a motion on the floor that's moved by Bivens, seconded by Dallas. All those in favor signify by saying aye.
Aye.
All opposed, motion carried. And then we also have the letter, presentation and approval of the Whippley letter, required communications letter. I think, does this have to be moved to executive as well, or is this just us approving this, guys?
Technically, you guys are more accepting the audit versus approving the audit, so.
Oh, that's
I don't-
true.
Yeah, so I don't think it
Thank
really
you.
matters how you guys do it. The audit, the audit is what the audit is, so you guys are more accepting the audit as presented to you.
Yeah, note the change in, for the motion that we're not accepting the audit, we're accepting the audit, not approving it.
Okay.
So then, okay. So as far as the communications letter, we don't really have to do, we've got the presentation approval. I'm looking at the action items for this morning, guys. So do we need two things on the B and the C? Or is the
I-
one motion?
I
handles
think, I
both
mean,
of
I
them?
think the one, and you could accept all of them at once.
Okay,
Yeah, they're all related. We wouldn't get the audit committee letter or the required communication letter without the audit, so.
all right. So we'll note that. You guys okay, makers of the motion, okay, that we're taking care of both items B and C, moving that to executive. Okay.
So I don't have it moving to executive.
Well, so we have to, yeah, because doesn't the county board, the full board has to accept the audit.
Well, if we're accepting it, not approving it, you tell me, we can put it on the executive committee for the county board.
Yeah,
Okay,
yeah.
then we
So-
will.
Okay. Are we clear?
So we're going to accept them and then move them to executive committee for approval, or
Yes.
to accept it in.
Finance committee is accepting the audit report and be moving that to executive
For county board.
for county board approval.
Okay, gotcha.
Okay. All right. All those in favor signify by saying aye. All opposed, motion carried. Okay. Thank you, Josh. All right, back to normal order, and we've got the monthly financials, which will include the quarterly report.
All right. So, I guess not a whole lot to report, pretty consistent, month over month. In fact, I would have thought we would have been, maybe running even a little hotter in expenses after the month of May, considering it was a 3-pay period month. I mean, we're right at that 49%. So maybe we're a little hot, we're halfway through the year, but not something that couldn't be accounted for by department heads being a little managing their budgets appropriately over the next 6 months and be under. So I saw that number as actually being pretty good, considering it was a 3-pay period month. The cash balances for the general fund, I know that that's a rather large negative number, but it's pretty common in this month because we haven't yet started receiving our property tax funds. But we will get a distribution from that in July. It's pretty common that we are negative. Our bank account is a negative. We have, consolidated funds, so we have plenty of money in there. The capital projects improvements funds are in there, so our bank accounts are negative, just that particular fund at the moment.
Right.
And that's just due to the timing of those revenues. I guess the only other item that I thought was of note is in our revenues. We're continuing to see slightly higher than what maybe we expected in like sales tax for all of the sales tax related revenue sources. Public safety is coming in a little higher than anticipated, which is good. We are still seeing adjustments from the state of Illinois within our use tax. I don't know exactly when they're going to be done doing that. We've had some conversations with Aaron Allen with the state of Illinois about how, you know, what they're doing there, but hopefully we'll see those, you know, be pretty consistent in the upcoming months and get a handle on, you know, when they're done reclassifying vendor or retailers from use tax to sales tax.
Did we
Yeah.
talk about it last month? What that reclassification means, because I want the committee to really understand what that means, because and I guess I'll take a stab at it, Reed, and then you correct me and make sure that the chairman is correct in way I'm thinking. But when they reclassify it, it's going basically into a different, they're moving what was in one formula and moving it into a different pot. And that recategorization goes into a different formula. So it's not a reclassification where we get the same money, just in a different, under a different name. It goes into a different pot, and then it's redistributed differently. And our part of that pot is less. So we will get a lesser amount of that local use tax somewhere else, which isn't good.
Correct. In essence, yes. So what I had found out was in the past, that local use tax, which we typically saw somewhere around $40,000 to $45,000 a month, was a pooled amount. Almost you could call it the Wayfair tax, if you will. It's the, you know, internet sales tax. But as of July 1st, 2024, the state now has redetermined or reallocated, and they started with major retailers. So if they had Nexus, which is, do you have, you know, something here in the state? If you do, now, if you ordered something online here in the Lee County zip codes, it'll go directly to those zip codes. In the past, it may have just been pooled into a state fund. And then they were dividing that pool based on population of county. So Lee County was getting about 40,000. Today, in the last 3 months, we have averaged about 6,000 or 7,000 a month in that local use tax, but our sales tax has increased slightly, but not the delta difference. And where that hurts us is the urban areas have more people buying. And if there's a nexus for those vendors that they're buying it from is in Illinois, it'll go directly to their zip code. So in the past, where maybe we were getting a little bit of subsidy from that total value, going forward, we will not. But since we are a rural area and we have less people and less purchase, you'll get less of that pool. Only in the sense because they're going to move it. They're going to truly try to get it to the zip code that it was ordered from. So that's the catch-22 that you guys all have to work through on, and we will too, on sales tax revenue.
So the numbers that we're looking at are still in limbo? Is there transitioning, or we?
Well, you're
this is
seeing
like
the,
what we're gonna-
yeah, you're
what it's
seeing
gonna
the
be?
transition right now, but my thought is where we're seeing 6,000, 7,000 a month, we may see that now going forward. and then at some point, the reason you would still see some money is because there are vendors that individuals from, or even companies from Illinois are buying from via the internet that have no nexus here, meaning they have no presence in the state of Illinois. So they don't necessarily have to charge sales tax for the state of Illinois. If they do, it just goes into a statewide pool that then gets shared. But that's getting less and less and less and less. So my thought is we're going to see probably at best, maybe 8 to 10 a month versus the 40 to 45. And again, so there's a $30,000 to $35,000 difference there. Our sales tax isn't going up that much more over what we used to see, but it is going up. It's just not going up to offset that.
Do we get any sort of reconciliation for that? Or is it just kind of like, this is your number and call it good?
You can, they limit that access very harshly. And the state will tell you that because what they're afraid of is somebody will use it to look at some, just to be getting, because private companies, if you're listed on a stock exchange, you're listing out what your sales are. But private companies don't necessarily have to tell you what their sales are. And what the state is afraid of is you'll try to find something on a private company to find out, oh, well, what are your true sales so that I could see what my sales tax income is. So they limit your access, basically. And you actually have to sign off that you will not use this data, nefariously, if you will. So, we can get it down to the sales, of the inside the county here, or even inside that zip codes. We could get that from the state. It's a long, tedious process to pull that through.
So here's my soapbox against the state of Illinois. And that is, they knew, or they had to have had an idea that this adjustment was going to happen. I mean, this stuff just doesn't occur quickly. It's talked about.
It's government.
Within the bowels of DNR.
Yeah.
And all that. And you get the guidance, but we didn't get, to my knowledge, we didn't get anything in this reclassification so that we could make, we did get the adjustments on the Illinois replacement tax, personal property replacement tax, but nothing on the local use that I'm aware of in last year's budget cycle.
Correct. But, and again, I'm not defending any person or department there, but in their mind, I believe that they believed that this was just a switch from use tax to sales tax. In the end, it's a wash,
Yeah,
right?
but it's not.
Without thinking it through, going, oh, well, wait a minute. Maybe the rural areas won't be getting as much as they used to. Would have been nice to know that they were going to do that change just so we could be aware of it and know what was going on. I mean, it took that first time when we went from 40 down to, I think, 6, it shook us up going, whoa, what happened? And that was their first big adjustment. And that was adjusting 5 months worth. And you're still seeing when they bring on new retailers, if you will, or vendors, they're really adjusting all the way back to July 1st of 2024 through what would have been April of this year. They're trying to fix the full year value. So we're seeing less and less and less in that use tax pool.
Right. Which even though the dollar numbers aren't really large, it is material.
Yeah, I mean, if you
to
look
the
at
effects on our budget.
Yeah, if we're down, even if we looked at the net change and we're down 10 to 15,000 a month in sales tax revenue because we're no longer being, and I use the word subsidized, but we were getting a pool that really they were just going, here's the total, here's your population versus everybody else. That percentage goes to you. Well, that's a great, that's a different way of distributing it. But now they're not doing that. It would have been nice to hear that. And we're not getting the delta difference. So 10 to 15,000
And
a
DePage
month.
County doesn't care
No.
because it's almost a rounding error. It'd be a rounding
Oh.
error in in
Oh,
their overall
absolutely.
budget.
Well, that's where I said, the urban areas, and you can name any one of those.
Right. I just picked out DePage.
Yeah,
that
it-
came to mind.
Yeah, it doesn't affect them as much, but we're talking over the course of a year, it could be somewhere close to $180,000, which as you guys saw in our last budget, we were so tight. We would have, if we could have found 10,000, we would have been happy.
Yeah, that's the point.
Yeah. So I understand your concerns, but I don't think anybody truly looked at it from a urban or rural or, how that was going to change. I think they truly thought, oh, well, everybody's buying this, so it'll just go into their sales tax revenue instead. But that's not necessarily the case.
In my mind goes to, because I know I personally contributed to this very significantly. This tax, that in a rural area, we do buy online more because we don't have the places to shop. So I go to, are the numbers accurate? Because I feel like we would have a higher, I know population. I mean, I
Yeah.
understand that too,
Yeah.
but I feel like that. So that's why I just ask about the reconciliation, which, I mean, it's a state, we're not going to get it. I understand that, but I don't know. It's just concerning when there's such a big, like, you can't account for it. You just have to accept it.
And even as you say, right, there's less places to buy here, so we buy online. But when you think about the population of Lee County at 35,000, and then I'll do DePage County, for example, and you've got Naperville at, and I think they're in DePage.
No, they're Kane.
Is that Kane?
Yeah, it's Kane.
Just any of
But,
those that
yeah.
are
By
in
pure
that area.
population.
Well, here, let's
They're
just
20
use-
times our size.
Yeah,
Yeah.
use Kane County. Naperville's 100 and some thousand people. They could easily outbuy the
Oh.
total of what we're doing here, even if everything we bought was here. They
Absolutely.
could still easily outbuy it. So that's my thought behind it is that's why it significantly changes us in the rural area. But as Jim points out, and it's true, their sales tax in 1 month could be what we see in a total year.
Right.
And so changing that slightly in a month to month is a decimal point for them.
And the other thing, I mean, we're talking about like people and sales, but we also got to remember, like, we don't have the number of retailers here in our zip code that they do as you move into those more, right? So they have more retailers with more nexus than we do out here.
Correct. Anyway, well, good discussion. It's important that we understand these things because it makes a big deal to our, as we go through and we're coming up to budget. Thanks, Josh. Appreciate it once again. See you next year. But it's important that we understand these things. So,
Yeah, so and you kind of brought up PPRT. They also changed that formula again this year. So that is becoming less and less of a contribution to the municipalities.
Yeah.
But
Right.
their theory is that it all then flows through the state income tax that most municipalities get. So we are seeing an uptick of that and a decrease in PPRT, but again, not enough to offset what we had gotten in the past.
any other questions for the monthlies? And of course, we'll make a motion to approve the quarterly, and we've got the report to sign. So I'll entertain a motion to approve the quarterly report, moved by Kitson, second by Bivens. Any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Opposed, motion carried. And I will pass this around. All right, we don't have, Nancy's not here, so we don't have insurance report. Administrator's not here, so we're moving right along. We do not have ARPA. We have no Joseph E. Meyer reports. Everybody have a chance to look at Clay's report. And we have no unfinished business, new business. So, we're at A. So this is the resolution that we do annually in regards to the county engineer's salary. And we get guidance from from IDOT for that. And if you've read through that, it'll be taking David's salary up to 156,200. And I'd need a motion for that. Let's get a motion moved by Bivens, second by Dallas. Discussion. Any questions on the resolution? Hearing none. All those in favor of the resolution signify by saying aye.
Aye.
All opposed, motion carried. All right, and we've done B and C. We talked about the veterans thing. Is there anything else good for the cause? Hearing none, entertain motion to adjourn, moved by Kitson, seconded by Dallas. All those in favor signify by saying aye. All opposed, motion carried. Thank you, everybody. Meeting is adjourned.